We are in the studio when it comes to direct alternative investments. It is Ryan Wright, the Chief Executive Officer of Fig Tree Capital Ventures. Ryan, welcome to the program. Let's get right into it. A lot of people know about your company. What makes you guys different from the rest?
I think it really boils down to company philosophy and how we treat our partners as a whole, as opposed to primarily the retail structure that's available to investors today. We strive to bring what would be considered a wholesale or an industry level project to the average investor. These are projects that typically only oil industry professionals would see, and we try to break that down to a level that an investor with maybe $25,000 or $100,000 can participate in and get those kind of benefits. For example, there's certain things that are out there that, when you talk about retail, they're going to be your one well and your multi-well deals. These deals are generally highly promoted. And you're just not seeing the types of documentation that you see as an industry professional. In our projects, the investors see everything from the ground floor up. They see the lease documents, they see the election and proposals that come directly from the operators who are generating our projects. They get to see all the monthly JIB statements and all the detail that go into the monthly accounting. So they know that they're paying the right price for the developments, they're paying the right price for the leaseholds themselves. They're on the revenue side, they're seeing what the actual revenue is directly from the operator. So there's just 100% transparency in everything that we're doing. When it comes down to management, our management style is very involved. We like our partners to be very involved and understand the business so that they don't feel like they're along for the ride. They vote on everything that we do. We do not spend a dollar without their input. And so it's a very cohesive process with our investors, and I think they appreciate that, and it's what's allowed us to grow in the industry.
I think, Ryan, the clients definitely like the in-depth information. Now, what are you guys looking at when it comes to oil and gas?
We look for a few things. Primarily what we look for is low-risk development opportunities in the unconventional resource plays. These are your shales, the eagleford, the Bakken. Primarily our focus has been the Bakken. And because of the way we structure our programs in which our partners actually participate in the wells themselves, that generates cash flow and tax benefits, but a big important part of the way we structure our programs is the asset value. So many programs out there today, you get just the interest in the wellbore. Now, our programs, the clients themselves own the acreage. And therefore, not only do they get the wells production and cash flow and tax benefits, but they have the rights to the proven reserve asset value, which can become a huge benefit at the end of the program. If we decide to divest of the properties, that can create a big capital gain event. And that's a big benefit for investors, because you're not just relying on the cash flow from the wells to generate your return. So you have multiple facets of ways to recover your capital and see profits from that type of structure.
Okay, I know a lot of people out there are very interested in this. What is Fig Tree Capital Ventures' track record when it comes to oil and gas?
To try and put it in simple terms, if you had bought a set position size, and typically you hear the word a unit, so we'll just leave it at that. If you had bought a unit in every program that Fig Tree has offered, this would be good, bad, and indifferent projects, you'd be averaging in the mid-20s in terms of annual cash flow, not including your tax deductions.
All right, Ryan, I think a lot of investors would be very pleased with that. Let's talk about what's hot right now. What are you guys looking into?
Our main product right now is what's called the Drilling and Acquisition Fund. This is an excellent product for investors because it allows them to diversify over a large area. For example, our current fund has an interest in over 30,000 acres in the Bakken Shale and some of the core counties, McKenzie, Dunn, and Williams County. And what this program is designed to do is allow partners to participate in an overall development, spread their money around over a lot of different projects, so you're just not exposed in any one particular well. And the idea is that the returns average out across the board. With this program, as I said earlier, the investors actually own the acreage rights. So as we develop the leasehold, we're creating additional proven locations, proven reserve value. The plan with the fund is to do the minimum amount of development necessary in order to prove up our leaseholds. And at this point, we will look to divest of the properties and see that capital gain we mentioned earlier. Another key component of our products is that we take on no debt. And this is a big deal, as folks who have invested in real estate in 2008 or oil and gas now may know. It's generally during market downturns that those folks that have used leverage to secure properties can really get hurt. And so folks that are using just 100% cash to purchase properties can weather the storm much easier than folks using leverage. And I think that's a huge benefit to our partners in this particular structure.
Ryan, what should investors be looking for in the oil and gas investments?
Besides some of the things we hit on earlier in terms of diversification, participating in low-risk areas, I think you really need to be able to do a comprehensive evaluation of the people you're investing with. And that means just complete transparency. So you should be able to see the things we talked about earlier. What's the well costing? What's the spread? What are you making off the project? If those things are not disclosed, that's a red flag. You also need to be leery of investing with financial firms who the managers and owners of that financial firm are also the owners of the operating company. That, to us, is a direct conflict of interest, and it really means the driller and the financial firm have no incentive to create the lowest cost environment for you and work the best possible scenario for your money. And so those are things that I think investors need to be leery of. You also need to be able to clearly define the manager's track record. And if it's poor or it's undisclosed, that's a red flag there. So those are just some of the things that investors should look for and be leery of. And the evaluation process is much more comprehensive than that. And if folks are interested in really learning how to truly evaluate an oil and gas program, then we'd be happy to share that information with them if they're able to give us a call or email, something of that nature.
That's great. Good information, Ryan. So if people are interested, how do they get a hold of you?
You can contact us at invest@figtreecv.com, or you can call us on the 1-800 number on the screen.
All right, great to have you in the Investor Studio. Appreciate it, Ryan. Thank you very much.